What's going on, guys, and welcome back to another video. So definitely the most requested video that I've been asked to make, especially from Irish viewers, was capital gains tax and how and why you have to pay tax on your stocks. I've got at least 20 to 30 separate requests from Irish viewers asking to explain this, and I've got the exact same scenario from each of these people saying that there was very little to no proper information in terms of paying CGT in Ireland. So today I hope that I can clear this up for you a bit more and hope that I can help you along the way in terms of knowing what to do in terms of CGT. Just before we dive into all of this, can I please ask again, if you're new around here, to consider subscribing to the channel, as we're only 6 subs away from our next goal of 600. And with all that being said, let's dive right on into today's video. The main questions I got asked on my Trading 212 videos in terms of tax in Ireland is, firstly, when do you need to pay tax? What is the threshold? Do you need to pay tax on your dividends? And how much tax do you need to pay on your overall account even if you keep the shares? So I'm going to go through each of those scenarios today, and hopefully I'll be able to clear this up a bit more for you guys. If you are a resident of Ireland, you would think that the best place to go in terms of looking for CGT information would be Revenue.ie. However, surprisingly enough, and even to my own amazement, there's actually little to no proper information on that website, and that's actually where you have to go to pay the capital gains tax. So it doesn't make much sense as to why there is no proper information on Revenue.ie. So after doing some digging, I found a good site here. I'll put in the description below. It's called Money Guide Ireland, and you can see here that it gives a fairly in-depth analysis of what needs to be done in terms of capital gains tax. Definitely the first piece of information you need to be aware of in terms of CGT is, firstly, the percentage you need to pay in terms of tax, and also your threshold that is tax-free. So it's quite a good synopsis here, where you can see if you sell shares or property for a higher price than originally paid, you're deemed to have made a capital gain. This capital gain is subject to tax called CGT, which is currently 33%. Now, you don't have to pay 33% on all of your profits. It's worth noting that the first €1,270 of taxable gains in a tax year is exempt from CGT in Ireland. You can also deduct any trading costs from your profits. It's also worth noting that, for example, you do not pay if you lost, say, €10,000 in one investment and you gained 9,000 in another investment. You don't actually pay anything because overall you're in a net loss. So it's only your overall profit or loss in any given tax year. It's a good example here as well. So for example, if you bought shares worth €5,000 at the start of the year and you sell them for 8,000, let's say at the end of the year, you can see that your disposable proceeds were 8,000, your costs were 5, you'd have a chargeable gain of €3,000. Again, as mentioned above, you are exempt by €1,270, so you only need to pay CGT on any profits over the €1,270 mark. So if you made €1,170 in any given year, you don't have to pay any capital gains. If you made €1,300, you only pay, let's say, capital gains on €30. So in this example here, again, as you made €3,000 overall and you're exempt from €1,270, you need to pay CGT on €1,730. At 33%, this would be €570.90. Another question that I seem to get asked quite a lot as well is if you need to pay tax on any of your stocks that you still hold. So you actually don't. So let's say, for example, in my own personal account, we're currently up about €800. And let's say that was, for this example, because you only pay tax on over 1,270, let's just say we were up €2,000 overall. Well, if I still hold all of those stocks, I actually don't pay, or you don't pay CGT until you actually sell those stocks. So even if you are up €5,000 or €6,000 overall, you have to pay no capital gains tax until you sell those stocks. However, if you are up, let's say, €6,000, and at the end of any financial year you decided to sell €1,000 worth of those stocks, then you only need to pay the €1,000. You actually don't need to pay because it's not over the threshold of the €1,270. So a lot of people do that as well to get away with tax. They don't actually sell all of their stocks at any given financial year. They kind of spread out the stocks as they don't have to pay tax in any given year if it's under the €1,270 threshold. Another question I get asked quite a lot is what time of the year or how frequently do you need to pay CGT? So we can see here again, for disposables made between the 1st of January and the 30th of November, you must pay CGT by the 15th of December of that year. For the 1st of December to the 31st of December, that later period, you must pay CGT by the 31st of January of the next year. You can register for CGT on Revenue.ie that I mentioned at the start of this video through your My account. So again, on Revenue.ie, it's extremely poor in terms of quality of information that's available in terms of CGT. I was quite surprised that there wasn't a kind of step-by-step guide on how to do so they could definitely do with improving that. Just as an example here, on my trading 2-on-2 portfolio, you can see my dividends here. We have got about €25.96 in dividends. So in order for you to get over €1,200 in dividends, you need a quite substantial amount of money invested. Firstly, in my own opinion here, I do not believe that trading 2-on-2 take the tax off these dividends. You can see, just as an example, PepsiCo here, we got 38 cents. On the 12th of January, it's an ordinary share. We can see the number of shares I held, the amount per share I get for dividends, and the total amount that I'll receive in euro. When paying CGT on dividends, there is about 2 or 3 different factors you need to factor in. Firstly, what broker you use. Some brokers actually take the CGT directly off the dividend before you get paid. Then other examples, you need to see what country you're domiciled in and what country you're paying the tax to, e.g. where is that stock actually situated. That will affect also if it's 15 or 30% tax you need to pay. Obviously, the majority of people investing aren't actually accountants, so in my own opinion, all you kind of need to make sure is that you have a threshold of €1,270. You know that you need to pay at the end of any tax year, so the end of, let's say, November, December time, you need to pay your CGT if your overall profit and loss is over the 1,270 threshold. And again, you only pay CGT of 33% on anything over that 1,270 P&L. You also, again, you need to know what dates, so at the end of the year. And if you have large sums of money invested, now I mean 100 grand more, and if you have a lot of P&L, so if it's well over that threshold, my advice would be to actually get an accountant to look after all of this for you, especially if you're a day trader or a swing trader where you could have vast amounts of buy and sells over the course of a year. So that can be quite time consuming, and it can be extremely difficult as well to calculate the correct CGT and also to get your full P&L. If your overall broker, for example, on trading 2-on-2, the broker I use, you don't get an historic P&L. You only get your current holdings P&L on the website. So there is a lot of digging involved, especially again if you are a day trader or swing trader, to get the required information. So what I would suggest, for the sake of your own sanity, is to kind of just get an accountant. It doesn't cost a lot for them to calculate your CGT, especially if you're talking bigger money. Another thing that I would suggest as well, especially with being the start of a year and a new tax year, is that it's quite simple and straightforward. Just get a blank Excel and keep track of your profit and losses. I've started to do this as well, and one of the portfolios I'm currently starting was my ARK Invest ETF. I started only on the 7th of January. Today is the 15th or 16th of January. So what I'm doing there is simply keeping a track of my profit and losses. We can see at the moment we started with 1,000. We're currently up €135 or 13.5%. Again, that's miles away from that 1,270 threshold. But when you incorporate in my other holdings as well, in my other bigger pies, it's kind of handy to keep track of how much P&L you have, which will make it a lot easier for you at the end of the year to see if you have to pay any CGT. So that's pretty much it, guys. In today's video, I just wanted to give a very quick and brief introduction into tax and CGT that you have to pay in Ireland, as I believe there is absolutely no proper information online in terms of helping people out in this regard. So I thought it was quite helpful to even start with a basic video like this, and I can even dive into more detail if you have any suggestions. So if you want to comment below on any other tax related or CGT related information that you would like to require, if you're living in Ireland or abroad for that matter, but more specifically in Ireland, as I'd have a lot better scope in that regards. So if you found this video anyway helpful or entertaining, I know tax isn't entertaining as such, but it'd be great if you would consider liking the video. And again, if you're new around here, it'd be brilliant if you consider subscribing as we're only 6 subs away from our next goal of 600. And also, if you have any other questions, queries or suggestions, just comment below and I'll be sure to get back to you as fast as I can. I hope this video helped in any way, shape or form. Thanks very much guys, and I'll see y'all in the next one.